Hi, this is Randy Finney with the Right Side of the Chart, and this is a mid-session update for Monday, April 19th, 2021. We'll take a quick look at the broad markets and then some of the recently highlighted trade ideas. QQQ starting out here, I know it's a busy chart, but just to recap, most important features are the trend line here and the divergence that we had at that high. We had a decent correction, biggest correction in a while in QQQ, and went on to make a marginal new high so far, just slightly above that previous all-time high right there. And what that did, it didn't change much in the way of the longer-term outlook. It just took those divergences we had in place at that previous high and extended those. So there we still have the clear divergence here on the daily time frame, the weekly time frame, and everything else. So zooming down to a shorter term chart, the 60-minute chart, you have these uptrend lines right here. There's the BOD, or benefit of the doubt trend line, broken right there, a little snapback rally, divergent high. Moving, starting to move impulsively lower. We're seeing volatility spike. Last week I did a video showing you just about all the volatility indexes out there. The Russell 2000 has a volatility index. The Nasdaq has its own. Of course, there's the VIX, and even oil. We looked at all those, and most of those were at or near support. And so what you're seeing there is volatility now starting to spike. So those were in themselves trade ideas, the VXX or any of the TVX or any of those volatility index ETFs. And we still have a little bit of work to do. I gave you lines. I'm going to get to those in a second on the futures. I'm going to put a line right here as well that should be significant on this 60-minute chart. That's at about 337, 338. I might have covered that last week. I'm not sure why it's not showing here, but that's that previous high right there. And you can see we came up, tested. Finally, there's our breakout. Little back test with a slight overshoot, but again, it's a spike in volatility, and we're back there. So here's what happens. Anything much more than a move back below the lows of last week right there will mean that the breakout has failed. Not completely unusual or unseen to have a breakout come in and have a brief failure and then move on up. But anything much more than that, again, let's just look at last week's lows, should do the trick and make this breakout a false breakout. Remember, on the 60-minute chart, we also have divergences as well. So the divergences exist all the way out. They're all the way out to the from the 60-minute charts, daily charts, and even weekly charts, and those indicate trend reversals likely. And these are some of the targets, these mark levels down here: 330, 324, 32, and we'll go from there. We'll see if we get if we build on today's losses, or if they come in and buy it up. But again, it just wanted to point out this is the most impulsive selling that we've had here since we were in correction mode. That's usually what happens after a low volatility grind up to a top, up to a divergent high. Then you see volatility expand, and then the corrections come. So that's could be the start of it. We'll see. Certainly, again, it's been priced in the charts for a little while now. SPY. We're on the 60-minute chart. Let's take this line that I've had here. It's still a valid trend line. It was popped or broken, and then we just went on to put a marginal new high. But let's stretch this out. I'm not crazy about that because I have fewer reactions. I only have really not much of a reaction today, so we can leave it like that, like that. So I just want to point out I don't have a very clear uptrend line on the S&P 500 60-minute chart. That's what we're on. But what I do have are very clear divergences. We've been building those divergences for a while, and that's a level I think we need to see get taken out, about 410.39 on SPY. Let's look at the future. Oh, well, before I go to the futures, of course, there's some small cap traders out there, so I'll update the small caps. Really, IWM, I've been focused on the daily chart recently. We had the same uptrend line off the March lows, and the small caps, unlike all the large cap indexes, has not broken that, and that's been a target I've had since back here. And we came very close back then, but as I said, it was close, possibly close enough to do the trick. But as I said, I suspect that we'll get another thrust down and maybe hit that level. We're getting very close. You zoom in now, and that's where we're at. So that would be a target, and if that trend line goes, and it's pretty likely. The small caps have sort of, for the most part, been doing their own thing for many months now. At times rallying or correcting against, going against the grain of the large caps. But I do want to say this, that if the large caps, we do get a decent correction. If those divergences play out for a decent drop in the large caps. We'll probably break this trend line here in the small caps in IWM and come on down to that potential target there about 205. And again, I don't want to, these are near-term targets. There's a lot of divergences and excess conditions in the charts, sentiment indicators I've been going over for many months now at extremes that have come. When those extremes have been hit in the past, they're usually followed by much bigger corrections, more than just 4 or 5% pullbacks, double-digit corrections. So the potential is there. If IWM and things can happen fast, I just want to get this out there in advance, that if we come on down and we take out 205, we have a couple of 200-day moving averages about right here, but you don't have price support, decent price support, all the way down to about 170. And to just try to quantify it for you, should we get there, that's going to be a drop of about 22%. And again, just remember, stocks tend to fall a lot faster than they rise when you get a correction. So just, have your ducks in a row, whether you're bullish and long and you don't short and you want to protect profits on longs that you've had for a while or currently in, or you want to short, if you wait till we're down here, you're going to be in no man's land. And it's not as objective as shorting a break of 205 or a break of the trend line. So that's IWM. Let's look at the futures real quick. Mainly we'll look at the large caps here. Let's look at NQ, NASDAQ 100 futures. This is simple stuff. 60-minute chart. Look for the divergent lows. You get the rallies, divergent high, correction, divergent low, rally, divergent high right there. Correction to the divergent low. And we've been building these divergences right here. This is when our divergences started this time around. So we have almost comparable in scale or scope the divergences we had leading up to this 13% drop right here. And there it is. All I have to do is extend this line out. And should we shrug off this pullback today and go on up here in a day or two, or by the end of the week, I'll be talking about the same thing. As long as these divergences are intact, occasionally they do get burned through, but more often than not, these divergences play out for a trend reversal, and so that may have begun here. We'll see. There's the magic number I think needs to really open the door to some selling. 13,772 on NQ, and when we look at ES, got that over here. The S&P 500 futures, same thing. Divergent high, divergent low, divergent high, divergent low, divergent high, divergent low, and a divergent high. Starting to roll over. It's seeming a little bit more impulsive. You can see here. I'll zoom in a little tighter. There we go. So nothing big so far, and we do have support here at about 4,100 right there, and that should do the trick. But again, we're pricing in a pretty decent correction, and if you are already short or you want to short today, that could be your first target if you're trading futures. And then if that's taken out, that should open the door to 40.55. And so forth and so on. At this point in time, let's just say this would be, again, at this point in time, my max swing target. So if you're looking to game a pullback in the S&P 500 futures, that'd be about a 4, what is that number? 4, yeah, about a 4% drop from where we're at right now. If we get there. So we really don't have any sell signals at this point in time. We just have the market down today, and down a little bit more than it's been in a while. So a little bit of a change of character, but again, it's not a hard sell signal. I don't see any support level break, just rejections off the back test, or I should say just impulsive move down after a marginal new high. Okay, moving on to some of the other things that are out there and already on buy or sell signals. This is one of them. NG put in this divergent low, positive divergence here, and it's been walking its way up. There's your uptrend line. I believe I mentioned it last week as a pullback to that trend line is another objective add-on or new entry. If you weren't, that's you recognize a trend by pullbacks to trendline support. And just like back here, we were long that gas too, or it was thrown out there as a long trade idea. I was long that at the time and said if it breaks that trend line, that would be an objective stop below, and that you would have sidestepped that correction down to low. And then it was re-highlighted here, or highlighted once again as another objective long entry. So in other words, long entry back here on the divergent low, breakout, back test, and rallied up to that 2675 target. And as I said when we were back here last week, I believe, since that target was already hit once, I favor to move up to that 2741 and a breakout above the 2675, and that's what we had. So there it is. Next target's hit. We do have some potential divergence, or actually confirmed divergence there in the PPO. Not so much in the RSI, near divergence, almost flatline divergence we can call it. So we'll say that. And that's what favors a pullback here. And if we get pullback, I give you arrows like I did today on this. I updated this chart and the one of sugar as well. I'm showing you potential pullback targets. It's not a hard call on where we're going, but levels that may provide another objective long entry if natural gas keeps going. That would be an objective long entry. It would also be an objective level to put a stop if you're swinging up to this next resistance or potential target there, and that's at 2,929 or so. I always like to sell a little shy of the actual resistance level. Sometimes a buyer step in early, but so far we're in an uptrend on natural gas. And if you don't trade futures, or if you do, you can use QG, which is a smaller, it's the mini contract of natural gas. It uses those same price levels as NG I was just covering. And of course there's some ETFs out there, ETNs, that track natural gas, and this is the one I've highlighted recently. So one of the more liquid ones out there. Divergent low right there, positive divergence. You got this rally right there, had a correction, and then we put in this divergent low right here more recently. And you zoom in, we've now taken out that 987 target right there. So on this daily chart, I could add and will add, there's some minor resistance right here just overhead. That's about at 1018. I'll give you a line right there. And I'm looking here, I'm looking at all these reactions back in this area. And so there's potential resistance as well that UNG just hit. And if it can take that out, probably be looking somewhere up here. That's not a hard target. This probably coincides with the that reaction high I gave you on NG a minute ago. So those are potential targets, and there's your uptrend line. But again, you had that divergence on the 60-minute chart, divergence at resistance. We may get a pullback. I think the odds are pretty good. So you can either book profits or tighten up stops if you're going to hold out for more on natural gas. Next up, I mentioned sugar today, this morning, give you an update there. That's another one that also hit price target today. That's a quick update here. And that was it, at 0.1655, pretty well defined level right there. Some reactions there, reaction, and hit that. And when we hit it, we have a small divergent high, and so that was an objective place to book profits. Or again, tighten stops if you're holding out for more. That's the maximum upside target ahead for this trade. And when I say this trade, I'm referring to, it was first mentioned back here a couple weeks ago at this support zone. So mentioned as objective long entry at the support zone. We hit the bottom of the zone a couple times, and the next objective entry came on the breakout above the bullish falling wedge pattern right there. And so that's been a nice run. I think it was about 13% or so, if I recall. Measured it out this morning. And then since then, we had a rejection, pretty impulsive, that happened since I got that last post out. Broke this uptrend, minor uptrend line here, and we're back testing. So that's going to open the door for a move back. I think I had a pullback target of this uptrend line right there. Anything much more than that, or really that 1590 level right there, that's not going to be good for sugar. But that's, I think, what'll probably happen. Pull back to there. Buyers will step in somewhere between the trend line and the 1590 and maybe get another leg up. Again, commodities are in a clearly in a bullish run, bull trend, including sugar. All right, next. Not next up. Let me just go to the ETF. You can use CANE or SGG. And that's what SGG looks like. So there's that recent run, and it measures out about little less, 12. Yeah, no, that's 13%, 12.73 right there. Same gain there in the SGG. It does a pretty good job of tracking the sugar futures. And I wanted to do an update on the cryptos. This is Bitcoin futures, one of my preferred proxies of trading it, because this you can trade on an exchange instead of those Coinbase and all those. I never open an account there. I like stick with my brokers. And these are Bitcoin futures, BRR, and this is the daily chart, and they've been building for quite a while. This big divergence right here, negative divergence. and we broke down. There was some news that the Treasury Department's going to go after some of the banks or financial institutions that are maybe looking the other way, or allowing some money. There's a lot of money laundering goes on with Bitcoin, because it's not as traceable as cash, and so that was the news catalyst to trigger the breakdown. But I want to just point out that's a clear breakdown below the uptrend line, primary uptrend line. That's going to open the door for a move to my 44,655 first and minimum target, and potentially more. Next target, if that level goes, would be 2946. Again, these are Bitcoin futures right there. That's what it looks like on the daily chart. If I go to a 6-month chart, you're going to see 2-hour candles. It's the same trend line, but there it is. You can see it here on this 120-minute candle chart right there. There's your uptrend line, your divergence. There's your sell signal, and again, the targets I showed you were on that daily chart. Now that's going to most likely definitely impact the my crypto prox, my Bitcoin proxies, like GBTC is more of a direct trade on it. That's the Bitcoin Trust. And there are some potential targets. We already hit this first target zone back here on that first drop. If we break below the bottom of that target zone, about 39.25, which was hit right here, and we had that reaction, that's going to open the door to T2 down here to about 28.15. So there's your targets for GBTC, Bitcoin Trust, and then the others are Riot's one of the proxies. Riot broke down because it tends to track with Bitcoin. It broke down below this little triangle pattern here today on that breakdown candle, and that opens the door for a move down to 27. That would be the first target on Riot. And then I pointed out Ethereum is having a breakout last week, and it's still above that breakout level now, but actually back testing. It was above it this morning. So look, on one hand, you could say, oh, there's an objective long entry because you have a breakout and a back test at that 22.43. It's a pretty good support level. However, based on the fact that Bitcoin just broke down, I wouldn't. I'm going to pass on adding, taking a position at ETCG there based on the back test because of what happened with Bitcoin breaking down. So, and we also put in a divergent high on the breakout. And keep this in mind: should the breakout fail, in other words, we go back down below 22.43 or so, then that's going to be a false breakout, aka bull trap, and those are pretty powerful, pretty bearish events when they happen. So that could take us down. I'm trying to draw an arrow. That could take us back to this trend line right here. So there's an area you might want to look at, and there's also good support there about 1733 or so. Again, we are at support now, and as I like to say, support is support unless broken. So, you could either step in here if looking to go long, or use a solid break below that level, or slight break, depends on how tight you want to put your stops, as a stop loss order if you are long. And if you want to short it, you could also short a break back below 22.43 with a stop somewhat above it. Here's what the volatility indexes look like. This is the VIX. We've been building. We had divergent low there, and we had a nice rally. It was a big move in the VIX. We took out most recently this support. That was a big level in 1983. And when we couldn't hold it, we took it out. We moved down to the next support zone. We just hit the bottom of that at 1573. If you can see there's a big green candle so far today. Sometimes they're just an aberration. You get a big green candle like you had right here, and that was off support as well, but it didn't pan out, or there was no follow through. But again, be on the lookout because again, the charts, it's all priced in. A potential big drop. The technical case can continue to be made. The trend has been extremely resilient. Don't get me wrong, we're in a bullish uptrend. We don't have the sell signals yet on the market, but we continue to see extremes in sentiment indicators. We continue to see, in this case, divergences building. Just like we have negative divergences on the index building, we have positive divergences on the VIX. Now, those divergences can build for months and sometimes even years. But it is what it is. So far, it's a reversal off support with divergence, so you have to be on the lookout. If this continues to move up here, then that should be a red flag, or at least a yellow flag, if you will, for the markets. And that's just one. You also have the NASDAQ Volatility Index. I hit the pause button somewhere in the video. Hopefully I covered the VIX. VIX was at support with the divergent low. Not sure when. I thought I hit the start button, but I'm covering VXN here, and I'll just loop back to VIX just in case it didn't record as I was talking about it. But there's a support 2138 on VXN, the Nasdaq Volatility Index, as the divergences continue to build. Positive divergences. Should they pan out, that would equate for a decent rally, which would also mean a correction in the VIX. Again, if it pans out. So far, we have an impulsive reversal, but just as I was talking about a minute ago in VIX, I'm going to loop back. I'm not going to do the full coverage. Sometimes you get those big candles like we have today. This is a big candlestick, green candle off of. I'm trying to circle it. Big green candle off of the bottom of that support zone at about 1573, give or take. The support zone runs from about 1673 down to 1573. And as I was saying a minute ago, again, I don't know if it recorded. Sometimes you get them. This was a big green candle, about comparable in size, right off of that previous support, which was taken out, the 1983. Once that level gave way, we moved down to the next support zone. Sometimes they pan out, sometimes they don't. It is certainly worth monitoring because of the fact it is a divergent low and the VIX at support right now. And as I showed you, so is the Nasdaq Volatility Index. This is RVX, the Russell 2000 Volatility Index, just a big green candle with divergence. We're a little above. We're actually in no man's land between the 2028 support and 2736. Oil still at the bottom of its volatility index. Okay, it appears the recording software, something's quirky is going on. I just went to move on to the next stock and it was paused. So if I didn't, I don't think this one was covered, but this is Mara, M-A-R-A, highlighted in the short trade ideas last week. The basis of this trade was a short off that 5089 resistance, goes all the way back here to 2015, 2016. It had capped all advances from that point back in the stock. We had a little momentum fueled overshoot there, a little false breakout and a rejection, and the stock is already down about 42% since the divergent high just a couple weeks ago. So the case was made, on this one last week here, after that rejection on 5089, and it continues to move lower, down another 13% today. And again, it doesn't look like much. I just covered this, but I don't think it was recorded. I use log scaling. If you don't, you're getting a distorted picture. Now you can see why that's such a big drop, why that's a 42% drop when I take off log scaling. And what log does is it fixes the chart, if you will. It puts every candlestick in equal percentage terms. So there are, a same, candle that's this big right here, that green candle, and one that's that tall. It's the same move if you see a candle that size elsewhere. Whereas when you put on arithmetic scaling, which I flipped to a second ago, it's just showing you the move in dollar terms. And the thing is, move from a quarter to $1, that's 4 times on your money right there. But when you have a quarter point gain, and when it's $50, it's hardly anything. It hardly moves a needle. And log scaling fixes that. So there's my targets, 24.37. Still plenty of meat left to go on that one down. That should be another 27 or 8% drop. Then 16.15 if that level gets taken out, and that's how it works. And I think that's all these are potential targets. I wouldn't have listed them. The uptrend line, 16.15, and uptrend line and or 10.37, whichever comes in first. Again, first targets there, 24.37. We'll probably get a reaction if we get there, and then if we take that out with conviction, then that opens the door to the next target. Tesla was also mentioned as a short last week, right here on the kickback to that resistance level there. Resistance zone about 771.80 or so, and so far moving down. Nothing big for Tesla, that is. Down another 3.5% today, but it's panning out. And there's your first target there, 661.80ish. And if that level goes, that should open the door for a much bigger drop. But again, mostly sideways trading in Tesla recently. And then some of those other short trades also are doing good. Let me highlight a few. We had, actually there's one, somebody pointed this out today and I answered the question with CGA. CGA was a long trade idea back here, and I had at the time, the maximum upside target I had was 1435. And so they asked, would it be an objective short? Absolutely. And my answer was, and you can just look at it, was to the previous post before, this morning's post, I think. I said yes, absolutely. I would do a short there. It's extremely aggressive. 110% counter trend trade. I mean, there's nothing more counter trend than shorting a stock that's going near vertical. So zero sell signals. But again, I short in one of two ways. I either short a break of support or a bearish chart pattern, or I short a run into resistance if I believe that run into resistance is going to turn the stock around. And so what we have is the most overbought the stock has been either in recent years, possibly in history. It's the RSI is buried here and was higher today. It's over 90, 91, 92. And so we already had what I call momentum fueled overshoot. It's almost to be expected when you have a lot of velocity going into a resistance level that you'll overshoot it. That momentum will carry it through. So we've had that, and so to me it's a very objective short entry. It's aggressive, as I said, but you just set a stop above today's high because we already had the momentum fueled overshoot. Maybe we keep going, but if not, that's probably it. And that high is 1567. And now look at where we're at. We pulled right back down to below that 1435 level. So that's how the momentum fueled overshoots work. You overshoot and then come back down, and we're below. So we're sitting just below resistance right now. Again, 1435-ish. And so it makes a case for an objective short. And I laid out a potential target. I had a level here about $10. That would be my minimum pullback target on a short for CGA. So you're talking a 30 something percent drop, and possibly more. But again, that is the max target. And if you took this one long back here and held out for that 1435, kudos, congratulations. And I can tell you that's where I would be booking full profits if I still had it. All right, next one up would be SOX. I want to talk on the semis real quick. I mentioned that as a sector setting up for a trend reversal. It's had one heck of a run with the off the lows with the shortage of semiconductor chips, high demand, and there it is. So you had the primary trend line there that was already broken, back tested once, twice, and now we're rolling over impulsively after that second back test. We're moving down. So this is our BOD, or benefit of the doubt trend line. It's also the next target. If you want to look at the bullish case for the semis, pull back to that level would be a back test of this downtrend line right here and a test of the uptrend line. And so there's if you're long-term bull on the semis, you can go long there for the next leg up. Or if you're short the semis or planning to short, you can either add on to an existing position or short on a break of those levels. And the first target there is 366. And again, you can use SOXS, which is, you can buy this one long. It's just the 3-time leveraged semiconductor ETF. Yeah, I think I'll wrap it up here. A lot of these stocks were just covered last week, both long and short trade ideas. This is another one of the shorts. Again, based on what's going on in the market and the outlook. And this is Movado, which the plan or the basis behind that one was shorting here this resistance zone right there. With what I expected would be a brief momentum fueled overshoot, which so far we're coming back in, and so I think it's still objective on this one. Again, minimum target is this 25.75 level and or the uptrend line, whichever comes in first, and they'll probably come in roughly together. So you could short there, cover, reverse for a bounce, depending on what's going on with the market. If and when that level goes, that's going to open the door to more downside. But I would just, this is swing trading. I think that's a nice, clean, simple target. Well, I'm trying to give you a number on it. I'll do that. It moves that line. I can do it this way. Grab from there to there, and that's about a 16% or so drop if that target's hit. So, set your stops in line with your price target. 16% gain, you could use a 4% stop loss, and that gives you a 4-to-1 risk-reward ratio. You can use a 5% stop loss, and you have roughly a 3-to-1 RR. All right, I'm going to wrap it up here, get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.